You checked your Social Security deposit and the number was wrong. Not off by a few dollars, off by 100. Sometimes 200. With no letter explaining why. No phone call from the agency. Just a smaller deposit where a larger one should have been. And silence. If that has happened to you, or if someone close to you has asked why their check looks different and nobody had a clear answer, this video is for exactly that moment. The explanation starts with a financial decision made 2 years before the deposit arrived. Here is what that smaller number actually represents. 2 years ago, you or someone in your household made a perfectly reasonable financial decision, a large withdrawal from a traditional IRA, a property sale, a Roth conversion. The income tax bill came, you paid it, and you moved on. What nobody told you was that Medicare was also reading that same income. Not then, 2 years later. And the extra amount Medicare charged for Part B came straight out of your Social Security payment, with no advance notice and no plain English explanation. Here is where it gets harder. Most people who investigate this discover a form called SSA 44, the appeal, and file it expecting relief. In the majority of cases where the income spike came from a voluntary IRA withdrawal, that appeal is denied. Not because anything was done wrong, because the form is written for a specific statutory list of qualifying events, and a voluntary distribution is not on that list. That is the piece almost no financial video explains before it happens. Today, we put the full chain together: what triggers it, what breaks it, and 3 figures from a widely viewed video on this topic that are factually wrong in ways that affect real decisions. Quick context before we get into this. This video is made for United States retirees and near retirees navigating IRA distributions, Medicare premiums, Social Security taxation, and the rules that connect all 3. Everything here comes from official published sources: the Centers for Medicare and Medicaid Services, the Social Security Administration, the IRS, and reporting from Kiplinger and AARP. This is educational content only, not personalized financial, tax, or legal advice, and not a promise that any viewer will receive or save any specific amount. Before any major financial decision, talk to a licensed professional who knows your circumstances. 7 items today, in scrambled order. The most important one comes last. Number 7. Social Security retirement benefits can be taxed at the federal level, and the thresholds that determine whether they are have not moved since 1984. The formula is called combined income half of your Social Security benefit, plus all other income. Pause and write that down. If that number exceeds $25,000 for a single filer or $32,000 for a married couple, up to 50% of your benefit can be taxed. Above $34,000 for a single filer or $44,000 for a couple, the IRS can apply that to up to 85%. The average Social Security benefit has nearly tripled since then. Millions of retirees are crossing those lines for the first time, not because they earned more, but because cost of living adjustments pushed them above a threshold set 40 years ago. Here is what most videos missed. The tax law Congress passed in mid-2025 created a $6,000 enhanced deduction for taxpayers 65 and older through 2028, which brings some retirees back below the taxation line even without a change in the underlying thresholds. Number 5. If you are at least 70 and a half years old and have a traditional IRA, the IRS built a tool into the tax code that most retirees have never heard of: a qualified charitable distribution, or QCD. Instead of withdrawing the money yourself and then donating it, the transfer goes directly from your IRA custodian to a qualified charitable organization. Because you never receive it, it never enters your modified adjusted gross income, the MAGI, that determines both how much of your Social Security is taxable and whether you owe a Medicare IRMAA surcharge. A QCD counts toward your required minimum distribution and removes that amount from MAGI entirely. According to the IRS, The annual limit is indexed for inflation, approximately $108,000 per person in recent years. The transfer must go directly from the custodian to the charity, never through your account first. Most major brokerages have a process for this. Number 2. When a spouse passes away, the surviving partner faces a Medicare cost increase tied not to income, but to filing status. Married couples filing jointly face an IRMAA threshold of $218,000 in modified adjusted gross income. The surviving spouse, now required to file as a single person, faces a threshold of $109,000. The income brackets that trigger it are cut in half. A household with $160,000 in income, filing jointly, is below the IRMAA line. That same income, reported by the surviving spouse filing single, lands in IRMAA Tier 2. According to the Centers for Medicare and Medicaid Services, the 2026 Tier 2 surcharge adds $202.90 per month to the standard Part B premium deducted from Social Security for a full year, with no advance warning. If you know someone who has recently lost a spouse and is on Medicare, sharing this before the following year's return is filed can make a real difference. Number 6, a direct correction. A widely viewed video on this topic states that online marketplace sales over $600 triggered a Form 1099-K to the IRS. That is not accurate for the 2025 or 2026 tax year. The same legislation that created the $6,000 senior deduction restored the third-party reporting threshold to $20,000 in payments and at least 200 transactions, repealing the $600 rule before it ever applied. One important distinction: taxability and reporting are not the same. If you sold any item for more than you originally paid, that gain is taxable regardless of whether a form was issued. Number 1. The IRS issued a 2026 advisory about AI voice cloning scams calls, using cloned voices of real government employees, sometimes with names and badge numbers found in public record, demanding immediate payment to avoid arrest. The rule is simple: the IRS contacts taxpayers by mail only, not by phone, not by text, not by email. If you receive a call claiming to be from the IRS demanding immediate payment, hang up and verify through the IRS's own official channels, never from anyone who called you. Number 4. Per the Secure 2.0 Act, required minimum distributions begin at age 73 for those born between 1951 and 1959, and at 75 for those born in 1960 or later. These mandatory withdrawals enter your modified adjusted gross income the year they are taken, and Medicare reads that same figure 2 years later to set your Part B premium. For people with substantial IRA balances, required minimum distributions alone can push MAGI over the IRMAA threshold without any additional voluntary decision. The most effective window for managing this is before the required beginning date through Roth conversions and qualified charitable distributions. Once distributions begin, those options narrow considerably. Before number 3, an illustrative composite, not a real individual, but a pattern that appears repeatedly in the situations retirees describe. Dorothy Chen is 71, a retired school librarian from Terre Haute, Indiana, filing as a single person since her husband passed 3 years ago. In 2024, she withdrew $55,000 from her traditional IRA to renovate her kitchen and planned for the income tax bill. What she did not know, that withdrawal pushed her 2024 MAGI above $137,000, placing her in RMAA Tier 2 for all of 2026. She found Form SSA 44, filed it, and waited. The Social Security Administration denied it. A voluntary IRA distribution is not a qualifying life-changing event. Dorothy paid an extra $202.90 per month for the full premium year, $2,434.80. She had not budgeted for and could not recover. Number 3. The complete chain. A large IRA withdrawal increases your modified adjusted gross income in the year you take it. According to the IRS, that higher MAGI may push more of your Social Security benefit into taxable territory, up to 85% for single filers above $34,000 in combined income. That is the first consequence. The second consequence arrives 2 years later from a different agency. According to the Centers for Medicare and Medicaid Services, your 2026 Medicare Part B premium is based on your 2024 MAGI. The standard 2026 Part B premium is $202.90, not $185. As stated in the widely circulated video, the IRMAA entry threshold for a single filer is $109,000, not $103,000. As also stated there, both corrections come from CMS official publications. Pause and write down both numbers. For a single filer whose 2024 MAGI crossed $137,000 exactly, Dorothy's situation, the Tier 2 surcharge adds $202.90 per month, deducted from Social Security, for the full premium year, with no advance notice from either agency. Now the appeal. Form SSA 44 allows recalculation using a more recent year's income, but only when income dropped because of a qualifying life-changing event. The qualifying events, per the Social Security Administration's Form Instructions Retirement, meaning actual work stoppage, death of a spouse, marriage or divorce, loss of pension income, employer settlement. A voluntary IRA distribution is not on that list. A Roth conversion is not on it. A property sale is not on it. If your income spiked from one of those decisions even once, even with lower income, now the appeal will be denied. That is what happened to Dorothy. And what happens to a significant number of retirees who file SSA 44 without knowing what it was designed for. What does work? Before the distribution happens, qualified charitable distributions remove money from a traditional IRA without it entering MAGI at all. Roth conversions done before required minimum distributions begin spread over several years. Staying below the IRMAA threshold, each year shift money out of the taxable system before the mandatory withdrawal clock starts. The $6,000 senior deduction, in effect through 2028, reduces overall taxable income, lowering how much of your Social Security benefit can be taxed. The tools to break that chain before it forms are available, and they work when you know about them before the withdrawal, not after. The full list? Number 7. Social Security combined income thresholds unchanged since 1984. $6,000 enhanced deduction for those 65 and older through 2028. Form W4V for voluntary withholding. Number 6. Form 10 99K threshold is $20,000 and 200 transactions, not 600. Number 5. Qualified charitable distributions bypass MAGI entirely for those 70 and a half and older. Number 4. Required minimum distributions begin at 73 and increase MAGI automatically. Number 3. The 2026 standard Part B premium is $202.90. Per the Centers for Medicare and Medicaid Services, the IRMAA single filer threshold is $109,000. SSA 44 covers qualifying life events only. Number 2. Losing a spouse and filing single cuts the IRMAA threshold in half. Number 1. The IRS uses mail-only phone calls demanding payment are scams. 3 things. 2 steps. 1 resource. 3 if you are between retirement and age 73. The planning window for Roth conversions and qualified charitable distributions is open now. Decisions made in these years set Medicare premiums 2 years forward. 2. Pull your 2024 return. Find your adjusted gross income. Add any tax-exempt interest, and compare that number against $109,000 for a single filer or $218,000 for a couple filing jointly. The Centers for Medicare and Medicaid Services figures for 2026, if you are near either threshold, a tax professional can tell you whether this year's income moves you to a lower bracket 1. Talk to a licensed tax professional who works with retirees on MAGI management. The concepts are in this video. The implementation belongs with someone who knows your numbers. If you have a sibling, a parent, or a close friend planning a large IRA withdrawal this year, share this video with them now, before that decision is made. The window to prevent the IRMAA double hit is always before the distribution. Once that return is filed, the premium is set. If you are already paying a surcharge in 2026, go back to the 5-minute mark, the qualified charitable distribution section. Most IRA custodians will process a direct transfer through December 31st, and that action reduces what Medicare reads 2 years from now. The next video covers the Roth conversion ladder, how much to convert each year to stay below the IRMAA threshold without triggering a tax bill that costs more than the surcharge itself. The brackets are published by the Centers for Medicare and Medicaid Services every fall. You can see them coming. Subscribe and turn on the bell.